Hello everybody, welcome to the January 2nd, 2024 Thursday price action review. Now before we get into this one, let me preface by saying today was a difficult day to navigate and even this week as a whole. So if you did not catch any of the move, that is completely fine and completely normal. These things repeat all of the time, so you shouldn't worry about missing moves or missing out on anything. Now with that being said, let's get right into the review. So looking at the 4-hour chart on the NASDAQ, you can see that low that we had outlined got hit, so our analysis was spot on. And now we're going to zoom in to this portion of price action right here on a lower time frame. All right, so looking at the hourly time frame with the NASDAQ on the left and the Dow on the right, as you can see here, we had a weekly SMT between Monday and Tuesday, which caused this rally to form another SMT, which gave us the narrative to hit our weekly objective. Now, the reason that this SMT did not continue pushing price higher is because A, our narrative was what? Bearish. So we already had bearish sentiment. We already knew the low is where we wanted to see price push. So anything bullish, we automatically see that as manipulation to allow distribution for our weekly objective to get hit. So this SMT right here was used as low resistance liquidity for the real run. Now, looking at a different perspective on the hourly time frame, we had that new week opening gap that was outlined in the previous price review, and as you can see, it got used again. And after it got used, we formed a TPD. Now, the reason why this TPD is important is because if you look closely, you can see on the Dow, candle 1 and candle 2 had an SMT between the NASDAQ and the Dow, and candle 2 and candle 3 had an SMT. So if we jump down to the 5-minute time frame, this SMT was not sequential whenever it comes to the 90-minute cycles. If you were focusing on the 90-minute cycles, this would not have been a 90-minute SMT. But the reason this SMT was still viable is because of the TPD. Remember, you need it to be in a sequence. So we have candle 1, candle 2, candle 3. So candle 1 being the 8 a.m. high, and as you can see, that got hit, forming an SMT. And then candle 9 closed, so we already had that predetermined SMT, and then we formed another SMT between candle 3 and candle 2, being the 9 a.m. candle and the 10 a.m. candle. And now the NASDAQ traded up a little bit higher on the 10 a.m. candle, but that SMT was still in use. And how you could have confirmed this is if you compared the NASDAQ and the S&P, as you can see, there was a 5-minute TPD right there that confirmed the run and then began the run downward. Now, whenever you start looking at the lower cycles, I would probably say the 90-minute and below, you always want to look at all three assets and compare them. And generally, TPDs between the S&P and the NASDAQ will be more of use compared to using the Dow. Whenever you start looking at the Dow on the lower time frames, it generally creates a lot of noise and will give false signals. So after we create that run lower, we do form another SMT. And the reason why this SMT failed is because, one, we already had that weekly bearish SMT form on a new week opening gap, giving us the bearish narrative. And we had that hourly TPD being bearish. So the reason why this failed is because we had everything else overriding this SMT right here. Now, as tomorrow goes, which is going to be Friday, I do not hold a bias for what we are likely to do just because we're trading in the middle of the range. So there's not too much information to be given, but we do have buy side liquidity resting up here, sell side liquidity resting down here. So if you're a little bit more experienced, then you know what to look for. You'll look for a bearish TPD or daily SMT in premium to target the low, or you'll look for a bullish TPD or daily SMT in discount targeting the high. So that will be all for this price action review. Hopefully you found this insightful, and good luck and good trading.